Welcome to Subramani. I'm going to talk to you about the mutual fund industry and the complexity. The mutual fund industry, make no mistake, has done a fantastic job of taking investments to the doorstep of every common citizen, and they've done a fantastic job, no doubt. I mean, the industry, the agents, the banks, the wealth managers, relationship managers, whatever you call them, have ensured a fantastic reach. There is no doubt. But having said that, to think that originally mutual funds in the 1920s originated in the US as products to simplify investments and not to complicate investments. It was meant to simplify investments because those days trade commissions were higher. Buying and selling direct equity was not so easy. So therefore the mutual fund industry was born. Of course, a lot of malpractices would have been there, costs would have been higher. I'm not getting into it, but largely it was done to reduce the complexity for the investor. Now, cut to 2023 India. The problem is we have so many funds. I mean, 45, let's say 45 fund houses and 40 schemes per fund house is 1800 schemes for you to choose from. You may choose, you may not even touch some fund houses. I'm extremely biased, so I may not even touch some fund houses, I may not touch some schemes, all that. So it will come down to, but it's still a big number. It's still about 200 funds from which to choose. Whereas the companies which have created wealth for us in the markets is not more than 100. Today, to me, it looks easier to pick a direct equity stock rather than a scheme. I have no clue why we have so many schemes. We have technology schemes, we have country schemes, right? So you have a China fund, you have a Japan fund, you have a Taiwan fund, and you have an Asia fund, then you will have some technology fund. Why do you have so many funds? Oh, because startups and very small companies are listed in Taiwan, but we cannot get enough of them in India. So you need to invest in Taiwan. Why do you invest in China? Oh, the biggest, it's such a big market, so you need to be invested in China. Why Japan? Oh, Japanese market has been beaten down so much. There is a justification for everything. Every CEO will be able to justify every NFO that he brings, but he will not be able to justify the same after 3 months, 6 months, 8 months of underperformance, right? There are funds where the over 15, 17 years it has made no money for the original investor. But so not long ago, our mutual fund industry was small, but today State Bank of India announced that it has crossed 8 lakh crores in AUM. The US market is a 20 trillion market. Yes, you heard me right, 20 trillion market, and they have a much bigger variety, right? They have F&O, they have cryptocurrencies. I think there are 30 schemes of cryptocurrencies which is now lying low because of the 2022 fall. 2020 and 21 cryptos were booming. 2022 it fell, so 2023 it has not recovered much. So that is the situation in the US, and it's not very far away that India will also launch leverage funds. So that will mean every fund house will now come with a leverage large cap fund, leverage small cap fund, leverage multi-asset funds. All that leverage will come. F&O funds will come. I'm surprised we don't have enough F&O funds. Though we see one fund house doing F&O very regularly, their returns are excellent. So these kind of some more funds will come. How does adding complexity help? It does not really help, because I think the gap between what the fund house is saying it will do and what it actually does, there is a gap, because they just can't find enough assets. For, I mean, look at the dividend yield portfolio of all the dividend yield funds in India. You would be surprised at them having fund invested in companies with 1% kind of a dividend yield. Of course, these are all companies marching towards better dividend yield in the future, but I don't know whether that's the right way to buy it. But anyway, we were talking about complexity, and is there a need to complicate your portfolio? Why does every investor have 18 schemes and 19 schemes in his portfolio? I don't think you need more than 3 or 4 schemes. If the scheme is good, be in it. If the scheme is not good, just exit. Yes, you will have to pay exit load, you will have to pay capital gains tax, which acts as the exit load. Therefore, a lot of money is stuck in old fund houses, even though they are underperforming, because people are thinking about the 10% long-term capital gains that they will have to pay for moving out. But I do think it is worth looking at it and consolidating your portfolio, because after you substitute Jan 2018 prices, the profits may not be too high. Pay the taxes and simplify your portfolio. Don't have a very complicated portfolio. I just did a portfolio declutter video saying that if you have a very complicated portfolio, sit with your spouse and children and ask them whether they are interested in it. Don't keep on creating wealth for somebody who is going to blow it in one day and say, oh God, this old man is gone, all the money is ours, let us go. And even in India today, we have a very complex portfolio. We have active, passive, long, short, credit risk, you name it, and we have a big variety in debt and in equity. And now there is hybrid. Then there is the funds which invest in more than when you're talking of hybrid, you're talking of two. When you're talking of multi-asset, you're talking of 3-4 assets, right? You could invest in Indian equity, foreign equity, debt, gold. Maybe some cryptocurrency will also get added. As of now, we don't have crypto in India, but it's just a matter of time when you will have get crypto and leverage funds. So does complexity really help the investor? The answer is no. But every investor wants to hear that you need to have a diversified portfolio. Diversified portfolio, yes, but today I can actually put your money in one single multi-asset fund and say, look, you're done. You don't need anything more than this, because it's 65% equity, 25% debt and 10% in gold, which is good enough for you. You don't need to do anything else. But then people need more complexity. They love complexity. People don't like to simplify things. People will say, oh, what happens if it goes up? So I need a I need this fund, I need that fund, I need 3-4 varieties. But Subra, you realize that fund which I put is a large cap, but it is a focused large cap. It has only 20 shares or 25 shares, whereas the other one where I put it has got 80 shares. So for some of my father's money I put in that fund, and some of my own money I put in a focused blue chip. Right, so many varieties of funds are there, which I don't think is going to be very helpful. It will create a lot of noise. Do you need to buy into every NFO? Answer is no. Does every CEO put money into every NFO that he comes out with? It's extremely doubtful. Right, so why do they create it? Well, they have to fill up their portfolio, because SEBI says that you can create these categories. So these categories have been created. So now you can have an aggressive BAF, you can have an aggressive multi-asset. I mean, what is it coming to? Do you want a passive multi-asset which just says, okay, only the formula is fixed. Every week we will reallocate and we might save more money in equity, more money in debt and less money in gold or whatever. We will keep doing this. Believe me, that alone is enough. Will we settle for that? Answer is no, we will not settle for that. We will also need another fund from where we can withdraw. So it has to be liquid and ultra short, and then somebody will tell you that, oh, actually mid cap is going to do better, and in your multi-asset fund, the fund manager does not take risk with the equity. So he plays it safe by buying only large cap. So you must put money in a mid cap, you must put money in a small cap. Now there is a small cap index also, so why not put money in the small cap index fund? Believe me, it is not very difficult to handle complexity. Just tune out of the industry talking to you on a daily basis about NFO or something like that, some revival of some old scheme. Just stay out. If you have 16 schemes, come down by one scheme every month till you reach 5 or 6, right? So that you can do. Please keep redeeming, doesn't really matter. If you have invested because, oh, that RM was a good boy or that RM was a good girl, so just to keep that person happy I invested, sell. If you have a complicated portfolio of insurance, of ULIP, etc., go to an expert, have it reviewed and reduce that also. Please reduce complexity, because having a complex portfolio does not mean you're getting better returns. I don't know, this has to be sunk into people's head, that has to be drilled into people's head, that even if you get a fantastic return of 32% in one fund scheme in 1 year, and if you put 0.5% of your money into it or 1% of your money into it does not really matter. If you have a 30, let's say you have a 3 crore net worth, and if you have put something like 3,000 or 30,000 in one fund, and that fund has given you 30% return, believe me, 9,000 on 3 crores is not a great return. You have to always compare the return that you are getting not only on that, but overall impact that it is having on your portfolio. Once you start asking those questions, then you will go and simplify your portfolio. Please ask yourself those questions, make notes, because you can read while sleeping. You cannot write while sleeping. So remember that. Start writing down why you have invested, what you have invested. Once you start writing all that logic, it will be easier to declutter and simplify. Your age doesn't really matter here. Thank you.